Okay,
Got it.
so welcome everybody to the first episode of the North Star. This should be released on a Friday, and today we're joined by Dakotah, who has had a illustrious career across investment banking, private equity, hedge funds, and has now started his own fintech company, Poolit, which is, from what I can tell, an incredibly amazing opportunity. But before we get into that, Dakotah, do you think you could just tell us just how you got from undergrad through to Goldman all the way to where you are now?
Sure. I went to undergrad at Brown University. I studied political science while I was there. I always knew I wanted to go into business. I didn't know exactly what that meant. So my freshman summer, I worked at a company called Zoo, which eventually was acquired by Roku, and it did like digital ad sales and was like a very cool company focused on that. I did a lot of summers a lot of other programs that freshman summer though. I did like a Google program they have for freshmen. I went to every diversity program on Wall Street, so Goldman and Barclays and all this sort of places to figure out, what exactly I wanted to land on. I ultimately decided that I wanted to go into banking, so I got an internship for the following summer at Goldman doing tech media telecom banking, and I did that all of the rest of my summers before and then I graduated and started doing it full time. But for me, it was really knowing that I love technology and business and trying to figure out whether that meant that I should be an operator, an investor, which was less of an opportunity at the time. Now there's a lot more programs for private equity firms and venture capital firms for folks coming directly out of school. But back when I was doing it, it was like kind of banking or consulting. So I even explored the consulting route too. I did an externship at BCG for a while, and ultimately just landed on banking. And so then left, did banking. I think you learn so many great skill sets as a banker, especially I think I'm kind of biased, but at Goldman, you learn a lot of like values about making sure everything's excellent, over communicating, teamwork. Like I think those are not just things that Goldman kind of espouses, but things that you really are burned into you when you like first start working there, and continue working there. And so it's a fantastic experience. I learned through the transactions I was doing, though, that the work that I found most interesting and for banking was just like so far down the line. Like I saw what VPs and MDs were doing around strategy for kind of talking to their clients around why they should do different transactions. And I thought that was really appealing. And so I said, okay, well, maybe I'll go and do private equity so I can get a better, experience of like architecting the deal myself and like thinking through term sheets and doing some of this other work. So I went to Carlyle and I focused on like doing telecom buyouts in this infrastructure group they had started, but it was all predicated on like digital infrastructure. So think about like Google Sidewalk Labs. I thought it was a great intersection of my background in political science mixed kind of with this finance piece. And ultimately, I just decided that I really loved the internet and I really love media companies and wanted to get back to doing that. I also realized that I wanted to go to public markets because I felt like there was a lot more autonomy when you work at a hedge fund. It's a little bit less team based, depending on where you are, but you kind of own a certain set of stocks. And I wanted to do that. And so I went and did long short equity at Coatue for about 3.5 years. And I ultimately decided that I, wanted to leave to start the Poolit, which of course is kind of, is predicated on the idea, and I can get into this later, about getting access to the same sort of asset classes that I've been working in. And so that was kind of the whole idea behind it. So I went to HBS, went to Harvard Business School purely to go focus on building Poolit. And once I did and raised around, I decided to leave and focus on it full time.
So that's a point I want to touch on, which is obviously you mentioned that Poolit is essentially cross-asset, and you yourself worked cross-asset with Coatue, public markets, and Carlyle and buyout, and even at Goldman with sell side. And to anyone who sort of is trying to enter finance, is trying to figure out just which asset they want to focus on, can you like briefly touch on the distinctions between saying working at a big buyout fund compared to a very short-paced, long short fund?
Yeah, absolutely. I think there's so many divisions even inside of those. I would say at the highest level, when you're working in private equity, it's very deep, long-term diligence on a couple of deals. So, if you go work at Carlyle or a place like Carlyle, what you'll be doing is you'll maybe in your whole 2 years that you're, an associate there, maybe before you go to business school, if it's kind of up route, or not up route, but like, one of those programs that forces you to go to business school, like Carlyle's was, you maybe do 3 transactions and maybe none of them ever even go through the whole time, right? Because it takes a long time to do the diligence, submit the bid. It's much more deep underwriting that you're doing. And so that's how I would kind of describe what that's like. It's like if you like to go into a library, sit there and really go deep on everything, I feel like that is kind of like what that job is really about. When you look at the public markets, it's a lot different. You're constantly balancing, quote unquote, a lot of deals because at any given time, you can enter into a company, right, from a public markets perspective. So you don't have to wait for the opportunity to come across your desk. You can always choose, and you can always choose to trade out. So the exit is also not capped, right? So I think when you think about it like that, Some places are shorter term. I think, especially if you look at more market neutral shops, like our market neutral firms, there tends to be a little bit more focus on the quarter or 6-month type timeframes. Coatue was a really deep investor and bought on more like 3 to 5 year time horizons or even longer, because of course there's a venture capital component of the firm. So we would hold all the way from like a seed or Series A stage all the way through public markets in theory. So that was fantastic. But there's obviously differences in that kind of model versus some of the others. Of course, my experience is only really with the Coatue Tiger type model. And so Tiger Cub type model. And so with that model, you also do deep research, but you're just constantly having to balance all of these different stocks that are in your coverage area. And you're always having to keep up with the climate and look at other factors going on in the market that could create compelling entry points, which is just a very dynamic and iterative sort of process, which I was very attracted to. But the diligence element of that is over a really long period of time. Like, if you're covering Facebook, you really learn a lot about it over a long period of time, but you have to kind of think about your entry points and exit points on shorter cycles. And that's how I would kind of describe some of that difference.
Yeah, I mean, I think it's particularly interesting how some of these sort of deep dive funds, like as you mentioned, Coatue right now, are looking at sort of fundamental, idiosyncratic reasons why particular sort of companies will do well. But I'm sure you've seen today with the crypto sell-off, with the S&P being at the lowest point in a year, just how useful is that deep dive aspect with the backdrop of such a sort of like a fraught macro environment right now.
Yeah, I think that's the beauty of a hedge fund, and people don't really talk about it a ton, but the beauty of it is that you can kind of reduce the exposure. People talk about the long part a lot, but not so much the shorting. The shorting allows you to offset some of those factors that are really volatile in markets today. And so you really see the benefit of a hedge fund, because a great hedge fund in a down, 20 sort of environment might be down only 10, because you can always at any time, if you're a tech focused hedge fund, go and short a ton of the NASDAQ, or go and short a ton of like the triple Qs or something like that. And that can be your way to offset the exposure you have in the market with your longs. And so, I think that is the other part that makes the work at a hedge fund so interesting and dynamic, because there are alpha shorts that are really, focused on more thematic factors that might be the complement to what you're doing on the long side. But certainly there are also baskets of shorts that you can create based on more, specific factors that tie to offset your long exposure. But of course, different firms focus on that differently. At a place like Coatue, you're going to focus a lot more on being concentrated in your longs, and that's going to be a lot more of what your book or your portfolio looks like. At other places, you might really try to offset those things almost one-to-one, such that the fund itself is making a 2 or 3% return, and you use leverage as a way to maybe amplify those returns, which is more of the strategy of a market neutral investor.
Yeah, that makes, complete sense. I think a big issue with, say, students for our age is it's easy to mention the word hedge fund, but the distinction between like long short, long only, etc., Tiger Cub, multi-manager, etc., is so hard. And I think it becomes particularly harder to understand when, for example, it's just unclear the cross asset, the crossover investors, etc.
Exactly.
And when we move over to sort of cross asset, institutions like what you're trying to build at Poolit, I was just wondering if you could sort of explain how all of your experience has led to, what you're building now and the problem Poolit is trying to solve.
Yeah, for sure. I think, the biggest experience I think I'd highlight is like maybe not even as much the professional one. I think growing up really low income, you kind of get into a certain way of thinking about and managing money. And I think as you kind of like go, and so I grew up pretty low income, like in rural Alabama. So when you like get older and you start like working on Wall Street, get exposure to a lot more sophisticated investments. Yet at the same time, I think especially during COVID, I was kind of like home with my family, and they were talking about like shitcoins and, like all investing was kind of the zeitgeist. And I think it still is. And I think that's something that's not really changing, but the opportunities that people had in front of them were just limited. And so people were almost starting to like, I think partially spurred by the way that the first wave of fintech really leveraged product as like in gamification, right? It kind of turned everything into a bit of a casino, and you're really seeing the downside of that today. So I wanted to build a platform that allowed people to get access to really high quality investment managers that were doing the deep sort of research I saw us doing day in and day out when I was at Coatue, and saw others, kind of doing as well at other firms. And I felt like people, if they were able to access these underlying investments at that level, they would have a better outcome. And so that's kind of what Poolit is all about. It's about, enfranchising and giving equity to folks who otherwise wouldn't have it. I would say there's a dual mission though, because even myself over time, like I became a private banking client, and all of these other things. And I think even in that experience, if you're not the largest investor, the opportunities are limited. And I'd also say because the check sizes tend to be so large, let's say you even have like a couple $100,000 or a couple $1,000,000, it can be difficult to get the diversification you want, especially with the sort of fee structures that they have if you're investing less than like $10 million in the case of some of these funds. So that's kind of what Poolit, the impetus for Poolit.
Yeah, I mean, you touched on a good point, which is that, during COVID, obviously we have the rise of, retail trading, etc. And I was wondering how you grappled with this distinction between, say, access to retail trading as given by Robinhood and then actual education as to what, are good investments, etc. Because as we've seen, many retail investors benefit on the way up for, say, crypto or, leverage equities or whatever. They have also sort of been catching a falling knife when it's all come back down in recent months. I was wondering if Poolit was, doing anything to sort of hedge that sort of risk of having greater access to investment opportunities.
Absolutely. I think that people focus so much on access that they kind of forgot about outcomes. I would say that, when I think about that continuum, I think that the two sides of it are like on the one side access and on the one side like outcomes versus education. I think education can influence you to have great outcomes, but I also think curation can. So I think about Poolit as a platform that's very well curated. We're working with an outsourced CIO who manages $2 trillion on behalf of tons of endowments and nonprofits and gets like institutional level diligence, like going to the funds, doing on-sites. I hired the head of investment partnerships for us. He used to work at the Yale Endowment and Northwestern Endowments, and so has a deep background in like proper diligence. I think if you look at dispersion and alternatives, it shows how important curation really is. So certainly, our focus is on top quartile managers. I think that the sort of investors that we have, which include like co-founders of Coatue, co-founders of Carlyle, certainly help us in getting that access, but also, leveraging this outsourced CIO provider, which obviously sees everything if you're a $2 trillion manager, helps us to really create something that's very curated. But I think the other thing that's really different about Poolit is our approach to product. The product, looks and feels a lot more like what someone would expect from like a public or a common stock or something along those lines, or a Robinhood versus what you see today in the landscape, which is kind of a lot of let's go do private banking again on a web-based sort of like designed platform that's still a little bit clunky. And I think this is the natural evolution of this space. Just like when you see stocks, the natural evolution was like, let's go trade on the stock exchange to, let's kind of make a discount brokerage to, let's put the brokerage online. And then, let's kind of make an app. So I think alts are going through the same sort of transition. And so that's what we feel like we're the natural evolution of the market.
Right. No, I mean, that evolution makes really good sense in the sense that, as you mentioned before with Robinhood, it was essentially the evolution of, no commission, payment for order flow trading to now what you're actually doing, which is providing deep due diligence, deep insights so people can make more informed decisions. And I think you also see that continuing with recruiting. So for those of you who don't know, Dakotah, you're a member of the Alternatives Investments Fellow at SEO, or at least you were.
Yes, I was at SEO. Yes.
And I'm also part of SEO in London. And sort of for students who don't know, I was wondering if you could sort of talk about how maybe you think the recruitment patterns in these, esteemed Wall Street sell side and buy side firms have changed from, say, 30 years ago being sort of old boys clubs to now essentially being a lot more accessible for everyone of, any walk of life.
Absolutely. I will first start by saying I still think that the industry has a long way to go. Yeah. So I don't think it's perfect yet, but I think organizations like SEO are really helping to move the needle. I think that what happened was there was first a wave of diversity kind of recruiting at banks, which kind of eliminated this overarching question that people always ask about, like, are people who have less, underrepresented minorities, maybe they're just not represented in the places that we go to target. And so I think as those organizations became a lot more diverse about who they were bringing in, it kind of eliminated some of that excuse. And also there was just a lot more natural filtration of folks from being bankers or consultants or something into going to private equity or other asset classes like that. And I think, there's a lot more work to do. I think that in alternative asset managers, it is just there's so fewer slots, and there's so much of a reliance on connection, oftentimes to banks, or, sometimes nepotism or like whatever the case may be, because the recommendations matter a lot when there's like one seat in a TMT group at like a KKR or Carlyle or something like that, right? And so, I think that those organizations are doing a much better job, but I think there's still a long way to go. I also think that, what I found a lot of times is that a lot of my peers already had family members who were in some of these places already, right? So they already worked at a hedge fund in the past. So when they go to do an interview at a hedge fund, it's not like it's the first time they ever saw a case study. I think what SEO is helping to hack the gap of is like the network gap that would naturally lead a lot of people to have access to the sort of materials that help them prepare. I think if everybody had equitable access to preparation materials, then you would probably see a lot more diversity than you see now, right? Or like if everybody, if every firm was following or was really passionate about making sure they have, even think about this with Poolit, for example, right? So like when we go out and we recruit, we make sure that we interview underrepresented minorities at like a proportional rate to the ones that are overrepresented, right? And I think if you just have firms that focus on that, you'll naturally lead to a much more diverse organization. So I think once we launch our website and announce formally and all of that stuff, you'll see our team is incredibly diverse and super high caliber. So you can do it, but I think there has to be a passion around it from the top. And a lot of these institutions are starting to do that, which I think is fantastic.
Yeah, and you teased that when you would launch your website. Is there a time now or any resources sort of an aspiring student could go to learn more about the Poolit, to learn more about your mission, and when you guys are going to get to the next stage?
Yeah, and folks can sign up for our wait list. They can go to thepoolit.com, so THEPOOLIT.com, and they can sign up for our wait list, and we will be communicating for like an early fall sort of launch of the app is when we plan to come out. So we're super excited about it.
Right, fantastic. Well, Dakotah, thank you so much for joining us on this inaugural version of the North Star podcast. I'm sure everyone at home watching this will be thrilled by not only your career, but what the mission you're trying to do at Poolit. I personally think it's a great cause and something that's long overdue, sort of improving that thing we talked about as opposed to access and also outcomes and education on the other side. And, I can't wait to see what you guys do next. So thank you.
We're super excited about it. And thanks for inviting me, and congratulations. This is fantastic.